Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back to the trading channel. Let's quickly go over the TA. There is not much needed today because we usually prepare the bigger levels before the moves happen. My plan is to make the bigger outlook video around the start of the week. After that, it is mostly about waiting, adjusting the lower time frame daily levels, and managing trades step by step. That is what I will be doing over the next months, and we will see if this format is useful for people or not. As always, let me know what you think. All right, let's get into it. Price is currently trading inside a range. We had a big deviation below the range, and so far a smaller one as well. That is the easiest way to see where we currently stand. Right now, price is trading near the lower par part of the range, and the range itself has not been lost. Unless price starts forming a different structure, for example, a sloping channel to the downside while leaving the range, I will continue to treat the range low as support. If that support is lost, then I will look for another trade at the next lower level. As long as the range holds, the expectation remains the same. First, look for the mid-range. From there, the process repeats. If price gets rejected, we look back toward support. If it reclaims the mid-range, then we look toward the range high. We had our FOMC move down into this support area, and that is where I entered the long I'm still holding. So, for now, that is the simplest way to look at the market. Nothing more, nothing less. If price comes back down for a retest, I will look to add to the position or open an additional trade. If it does not come back down, then I simply stick to the original plan and continue holding the long for higher levels. So much for the range. Now let's take a look at the EMAs. It is time again, as price is starting to form a few setups that we can use as additional conflict. 5-day EMA setup. It has a lower hit rate, as you can see, but no bigger move usually happens without this condition being met. A 5-day close above the EMA. The close is today in around 17 hours, and the number to watch is basically 63K. A close above that level would activate this strategy. From there, we use the data points we have for it. Quickly summarized. First of all, we need the close above the EMA. Once that condition is met, we look at the average time spent in the trade. Losing trades usually fail within around 2 bars. Winning trades last around 9 bars on average, with the overall average being around 4 bars. So, if we get the close above and the setup fails, it will most likely happen within the next 2 bars. That means if price hits resistance or starts showing weakness shortly after activation, that would be a sign of a potential fail. But if price reclaims resistance and the average fail timing has already passed, then it becomes more likely that we get continuation to the upside. As you can see, this setup actually fails quite often. The chance of failure is higher, simply because price is ranging most of the time. This setup is more useful for bigger moves. However, once it activates, it becomes nice confluence for holding the trade higher, for example, while price stays above the EMA. The average loss, if it fails around the first 2 bars, is around 5%. That would bring BTC roughly into the 60K area, which is also our lower timeframe confluence level. To the upside, the average gain is around 27%, which would bring BTC roughly toward the 80K area. Of course, we only use this as confluence for bias and direction. No need to overcomplicate it. Now let's look at our local level. Next, let's look at the momentum. On the 3-day time frame, we have a bullish momentum divergence. A new candle has opened, momentum has crossed up, and for the first time, it is moving above the bearish control zone. This remains bullish as long as BTC closes above 59K. Keep in mind, for this setup to fully play out, we still need a break above the last swing high. If that does not happen, then the door remains open for a 3-drive pattern, both in price action and momentum. On the daily time frame, momentum remains bullish as long as BTC closes above 62.2K. On the 4-hour time frame, we need a close above 62.4K. On the 1-hour time frame, momentum remains bullish above 62K. So overall, the higher time frames are slowly starting to turn bullish. On the lower time frames, we can still see back and forth price action, as always. But the general direction is slowly building on the higher time frames. Once we get the break above the swing high, the lower time frames will usually spend much more time on the bullish side. For today, the average gain aligns with local resistance. Personally, I missed the short that I explained yesterday in Telegram. For now, I am simply waiting because the setup is no longer the same. With that said, on any move higher, I will just enjoy the ride. If price moves lower, I will look for new trades. The main confluence area remains around 60K. That is still the biggest level for me. If that level fails, then I will simply look for the next trade at the next lower support. Between here and there, I was looking for a smaller trade around Monday's low because it had confluence with the Monday low, the 4-hour structure, and today's average loss level. However, that setup has changed compared to yesterday. Yesterday, I was looking for price to trade back into that area so I could scalp it. Instead, price already bounced and front ran the lows, leaving us with equal lows. So the next time price comes back down, I would like to see some bullish order flow signals or an SFP. Otherwise, equal lows can simply become fuel for a move lower. If I take that trade, it will only be a smaller position. I would pay myself around local resistance and leave a runner. All runners and swing longs I take are targeting at least the 66K level. One additional confluence for the possible SFP around Monday's low is the Revin indicator. The midline is acting as support and is currently around 61.0 to 61.2K. That aligns more or less with Monday's low and the 4-hour swing low, making it a decision area for the local move. As long as price stays above it, I continue to look for the range to hold and for higher prices. If price breaks below that area, then I start looking for lower, so mainly toward the next major confluence levels. Because this is a decision area, it also means I can actively manage a trade there. If we get the confirmation I am looking for, then it is a level where I'm comfortable taking a local trade. If it fails, then I simply move on to the next planned level. So that is the small update. No need to overcomplicate it. Just a quick overview of the important levels we are waiting for. Set your alerts, do your own work, and let the market come to you. With that said, I hope you have a great day, and I will see you in the next one.